Hello winners, it's Ivan here. Why are EURUSD retail traders 70% short on a day where EURUSD is currently just rising? I really wonder why. Can you please tell me in the comment section why a retail trader will short a EURUSD that is currently just making higher highs? The current chart of Euro USD that it just made a higher high for today. Today's buy price was at 1844. And guess who was there? And it, as you can see, the next green candle is a new higher high after that buy price. Why would a retail trader sell in that market condition? Why would 70% of Euro USD trader be short? Why would 70% of Australian dollar US dollar traders be short? And why would 73 of the New Zealand traders selling the New Zealand dollar, US dollar, when it is rising? Is there something wrong in their mentality? Is there something wrong in their strategy? Is there something wrong in what they have been taught or the information they have been attracted to? Are they believing that this year we're going to fall because of whatever, or is it actually, are they only using technical analysis, fundamental analysis, or just news? I went to do some research. Aha! I found a Facebook group, and I asked those who were posting EURUSD charts why were they selling the EURUSD. These answers are from some days ago, but still valid. I was looking at a double top at resistance. Okay. Yeah, but now it's a higher high, so now you should be out. Others are mentioning on the 5-minute chart, the 9 moving average crosses the 21 moving average, and then I should sell. That is 2 lagging technical indicators and nothing else, and they're only looking for the past and an inverted pin bar on the 4-hour candle. So they're using an indicator that says that if 2 lines crosses, they're going to sell, and a single candlestick on the 4-hour. That is going to move the market down. Another one says, I'm hoping that weekly sell liquidity will send the EURUSD down with a 4-hour inverted pin bar. Okay. Nobody has mentioned COVID. Nobody has mentioned the election. Nobody has mentioned the Fed and the monetary policy. Nobody has mentioned in the 4 out of 5 last elections, the US dollar has been bearish and fallen. Are they not looking for that information? Because that information I found for free on TradingView in the charts. Do they not read the central banking monetary policy that says that they're going to be holding their interest rates low, and also indicated that it can be happening for the next 2 to 3 years before moving the interest rates? And what has been the effect of a low interest rate in America? A weakening dollar. Are they also still betting that since the market now are rising, that somehow it will turn bullish? Also, Biden has now seemed to be winning the election. Now we have an answer, but that didn't change to the US dollar. The Senate and the Senate and the House was won by 2 different parties. We're still at status quo. So the dollar weakened and it weakened. But as you also know, this video is not sponsored by anybody. So let's get back to the video. What have we learned since March? Overall, the US dollar has fallen. Overall, euro has risen. And overall, the stock market has risen. And overall, economy has improved. Somehow, some little. All this leads to weakening dollar. A large percentage of euro is in the DXY. They are large trading partners. So, if a lot of weakening happening in the dollar, that will go to strengthening the euro, because that's where a lot of the money flow goes. And this might have been for years. We're not done. With that being said, give your vote by hitting the like button so other people can also enjoy this video. The CRT report that tracks the positions of large institutions has only been profit-taking since August. When are they going to re-enter the market? Maybe when the election results are clear and we can move forward? That is actually happening at this very moment. We are getting a clearer and clearer and clearer result out of the United States. Biden is still declared as the winner, and he's the one to become the most next president. So what is then going to happen? We have a clear result, we have a clear path forward, and we have a new higher high on EURUSD today. So what else is there to do? EURUSD might change the direction at any point at any given time. It can change from now, it can change tomorrow, it doesn't really matter. But what really matters is, for the past week or so, Euro USD traders has been short. More or less, they have been shorting it for the full week. Euro has been rising since 11th of November, which is the past 6 days. And also it has been rising ever since the election on 3rd of November. And we are actually 270 pips, give or take, from the low of the election. Does that sound like a bearish trend that Euro USD is going to fall and is falling and has been falling, and therefore all the retail traders in this world should sell it? No, it means the opposite. And I just want to tell you one very simple thing. If a price is making a new higher high, get out. There's nowhere to sell it anymore. Find a strategy that over 20 trades you can make profits. If you can't do that on demo, you definitely can't do that in real life. Also, find a bias. Yes, you might be wanting to short it, but you can't actually short it because you should have rules that prevents you from selling in a bullish market. And I would actually be very happy to help you. I'd be very happy to say that this is going to fall if it only made a new lower low. But it hasn't, so I can't tell you to sell it because it doesn't fall. You need market conditions that only favors you and your bias. The other thing that I also want you to have is following the trend. It might be cheesy, it might be difficult, it might be not understanding when is a trend going where. But with knowledge, with patience and experience, you will get it in the end. You might also need to know where to take profit. I use pivot points. Every week I know where to take profit. Every week I know where to enter. Every week I know where to take stop loss. Just because of a pivot point. That is an indicator, but it's just future support and resistance. I can use the chart, I don't need it. But it's an easy tool. Do I need anything else? No. But a lot of the groundwork is in my strategy, is in my intent, is in me being at a time where I know the market is going to go in my favor. And if it doesn't go in my favor, I will exit very fast. I also, in my strategy, know when I'm wrong, when I'm right. And I also know in my strategy when I'm going to lose and how much I'm going to lose. And it's very little. And when I win big because I let my winners run. I also want you to understanding that being out of the market for a full week without any entries is absolutely normal. It's even normal to be out for a full month if you didn't get the market conditions you were hoping for. Because if it's only 1 week during the year that you're not able to get your trend, what are you going to do about it? You wait because you want to preserve your money. I will also tell you that, generally speaking, 3 out of 4 weeks in 1 month where everything is just falling, 1 week will be against that trend, most likely. So you still get 1 week, even though the 3 weeks it was falling like crazy. I want you to win. I want you to succeed. So by this, why is 70% of the EURUSD traders selling? I don't know. Why is 70% of retail traders who are trading the EURUSD, selling EURUSD, I think it has to do about their education. It has to do about their knowledge. It has to do about what they have been taught or what kind of information they are attracted to. I also believe that they can make it, everyone can make it, if they only have the right tools, which is free and available. They just have to do the work required. Why is retail traders who are 70% short on the EURUSD fail? What are they doing wrong? Stop loss. They're not getting out when they should get out. 2. They might get a wrong entry reason, as in lack of knowledge, wrong knowledge, or they just believe it's going to go down, so therefore they should short it. Just a belief system. 3. Lack of a strategy that they can test on demo before going live. Number 4, retail traders are looking to what other retail traders are doing instead of believing in themselves and what their own mind is telling them. They're going into groups where people are just telling conflicting information and you don't really know what's the real deal. They might not have a bias. They might not have the job done ahead, planned ahead before they go into the market. Now, in 1 month, 2 weeks, we have December. I have already planned out my December. I hope you also have that. Planned out your December already, 17th of November 2020. So that you're well prepared of everything that's going to happen in December, and that if price come to the prices you want to have, that you are going to execute. And if you're wrong, you will leave the market and let it go. I think that you as retail traders can make it if you follow the trend, have a bias, have proper targets. I use pivot points. Do not use only technical indicators, but also using some kind of fundamental reasons to why the EURUSD should fall. No, alright, since the EURUSD should rise. Also, some kind of past performance in some shape. I said 4 out of 5 previous elections, your dollar has fallen. So why would you buy it this year then? Why so different with this year? And so far, EURUSD has risen over 200 pips since the low of the election. It sure happened again, and it might happen again in the future. So, don't risk money you cannot afford to lose. And retail traders, I'm here for you, to help you. Please tell me, why would 70% of retail traders trading the EURUSD short?